What is going on, crypto peeps? Welcome back to the Traveling Crypto. Happy Monday to you. Let us get right into it. Market cap currently sits at 110.8 bill. We did see a mini rally over the weekend. We're about 4 billion. We lost about 4 billion in market cap since then. It was pretty predictable, mainly because of the volume, and we'll get into that in a second. But the weekend volume, I mean, as is expected, was not great. Although I think people were hoping that it would carry on, that the positive price action would carry on into the weekdays, right, the start of the week, and then spur some new volume injection into the market. But that's not the case. If you take a look over the last 7 days, most of the cryptos, especially most of the top cryptos, have lost double-digit percentages. And we see shorts on a few of the top cryptos at near all-time high levels. And some of you were wondering whether short squeezes would come into the effect and then drive positive price action, potentially sparking a reversal. But guys, short squeezes happen all the time. It doesn't mean that they're going to, you know, initiate a huge 20, 30, 40% gain every time short squeezes happen. They can happen in smaller increments. As a matter of fact, even if you take a look at, you know, the Ethereum chart, for instance, you'll see this tall green candle here back in December 7th, where we went from about $84 to $96 and change. I mean, this was likely due to a short squeeze, or a short squeeze likely played a part in this rally, same as this tall green candle here. If you take a look at BTC, same thing. We see back on November 28th, we went from 3,700 to about 4,300 and change. This was likely due to a short squeeze, or again, a short squeeze likely played a part in this rally. So short squeezes occur all the time. It doesn't mean that, you know, we're a short squeeze, we have to see a reversal, or we have to see the price double from, you know, 3,000 to 6,000 because of a short squeeze. That's not realistic. All right, so while we're on the subject of BTC and Ethereum, we did have a pretty successful trade over the weekend. It was actually a short on Ethereum because it was pretty easy to read. Here you see Ethereum saw an ascending triangle. This is going all the way back to, you know, the second week of November to the beginning of December, and that ascending triangle failed, obviously, and we broke to the downside. Here we see another ascending triangle likely to fail again because of, you know, the terrible volume that we see here, also because of just the overall downward momentum. But we saw this ascending triangle, and I put an alert out on the Discord. If you want access to the trade alerts, link is in the description. But you'll see here, I put this alert out yesterday saying that if Ethereum retests this resistance up here, you can enter a short. Now, I wasn't assuming that this ascending triangle would fail, but I was assuming that we'd get at least down to the support of this ascending triangle, because this pattern is playing out pretty clearly, and we're seeing abysmal volume. Here, this orange line is the moving average of the volume, the 20-period moving average of the volume, and we're not even coming close to that on most candles. So the volume is abysmal, which makes it ripe for a decline back down to support if resistance is hit, right? So we entered a short here with a tight stop limit at around $98. And of course, when leverage comes into play, whether you're talking about 5x or 10x, your gains are multiplied. And on the way down, I feel like I closed out too early. Some people held out until, you know, we went below 90, but I closed out right around when we got right around to support here of the ascending triangle. So while I made almost 20% on the trade, some traders made upwards of 30% by holding out. And now we see that the ascending triangle has failed, just like the previous one, and we have broken support. And this is likely to continue our downward momentum at least until $83, which we see strong support here going back to December 6th. Looking at BTC, this is the weekly chart. You'll see this yellow line here is the 200 moving average, the simple moving average, right? Not the EMA. We've already broken the EMA and we're well below that. Here's the 200 simple moving average, and it looks like we are bouncing off of that as support. Some of you had questions, when do you use an EMA versus a regular moving average? Well, it's whatever tells you the most information. Right now, I see that, you know, the chart is respecting, or the price action is respecting the moving average. So this is what we will use as an indication, whereas sometimes you will want to use an EMA because it weights recent price action heavier. So based on this weekly candle so far, how it looks to be playing out, we will probably be looking to retest this again. And the more you retest a support level with failing volume, the more likely it is to eventually be broken. So I do think that we will eventually break this around 3,200 on the 200 MA. And if we do, 3,000, just because of the round number bias, is the next logical support. But I do have 2,800 based on previous support levels, as well as the calculation of the previous bear market and extrapolating that to this bear market. 2,800 is around what I'm seeing as support. Obviously, we can go below that. That's not a magic number, but that is the guide that I'll use for now. Looking at BTC on the daily chart, you'll see that we saw a heavy period of sideways trading followed by a steep decline and then a heavy period of sideways trading. We broke support. We have now re-entered the support zone and it looks like we are flirting with breaking it again, but strong support right now looks like it is at, on the daily, looks like it is at around 33.50. Looking at the 4 hour, you'll see that we are on a steep decline here, and you'll see that there is definitely bearish divergences between the RSI here. You'll see the RSI creating a higher high while we have the lower high on the price. Same thing with the stochastic for the same period, a higher high, or the stochastic RSI, sorry, a higher high. And the price obviously achieving that same lower high for the same time period, and then on the MACD as well. So on a slew of momentum oscillator indicators, we're seeing this hidden bearish divergence forming, which further indicates that the price will be declining. And then, you know, obviously the volume again looking abysmal on the 4 hour. Besides the ETH short, we did have another successful trade with EOS against US dollar for about 10% before EOS did drop back down right around to our entry of $1.99. EOS is showing strong support on the daily at around $1.75. Look in the trade alerts, continue to look out for alerts on EOS as well as other coins. QKC looks to be holding strong, seeing the support resistance flip. Once it broke the resistance of this sideways channel, this resistance is now playing as support, holding its head above water, retesting the support multiple times. Now, obviously, the volume again is low, and as we said before, the more you retest this, the more we're likely to break down. But QKC, you know, since the summertime has remained a good hedge against BTC. Before I get into the traditional markets, which a lot of you are enjoying, by the way, so I'll continue to do them, just wanted to say that Ledger is still currently running this 30% off promotion off any Ledger Nano in any color. So for US buyers, that's $69 US. A little bit higher, obviously, in euros, but nonetheless, it is 30% off. Link is in the description if you want the code for that discount. Getting into the major markets, we did see a decline in the major markets, and don't discount the fact that certain markets have over others, right? Like there is overlap between certain markets at certain times. So when there is a heavy decline in the stock market, that could also play into other investment or speculative markets such as the crypto market. So we do see around a 10% drop since the second week of October in the Dow Jones. If we take a look at the indices here, you'll see that we dropped another $420 today on the Dow Jones, almost 2% drop. The S&P is down 2170, and this right here, VIX, this is the volatility index based on the S&P 500. This is used as an indicator of volatility of the overall market, and you'll see that we are now at 9%. I mean, these are almost crypto level volatility. In my last video, I did say look out for the SPY, right? This S&P 500 based ETF, because there was a clear sideways channel, and every time it was hitting resistance, it will come down to support, vice versa. However, we have now on the daily broken the support, and it looks like, I mean, this is, you know, obviously it's early in the day, so we could get back above, and this could turn into just a long wick. But so far, it looks like we are breaking support. And if we close below this, we'll have a new low, a new recent low on the S&P 500 ETF. I was saying that I was going to possibly enter a trade here to ride the trend back up to resistance. But again, as said previously in this video, you can only test support so many times before it actually breaks. I'll continue to monitor this. Again, I'm considering adding traditional markets or, stock-based trade alerts to the Discord. Let me know in the comment section or on the Discord if that is something that you are wanting to see, and I'll try to incorporate that into the trade alerts as well as the analysis. Other than that, that is it for this video. If you guys appreciate these market alerts, go ahead and give it a thumbs up. If you have a question or a comment or an agreement or a disagreement, leave that in the comment section, please. Sign up for the trade alerts. Link is in the description. If you want help with your technical analysis or need one-on-one coaching, that link is also in the description. Subscribe to the channel, hit that notification bell. Stay safe out there. Peace.